Interest rates in Australia just hit 4.35%. That's the third rate rise this year, and if you have a mortgage, a savings account, or you're renting, it affects you directly. I'm Ryan from Reinvested. I make finance content for everyday Australians who want to understand what's happening with their money. Let's break down exactly what this means and what you should be thinking about. First, what's just happened? The Reserve Bank of Australia, the RBA, raised the official cash rate by 0.25% in May. That brings the cash rate to 4.35%. What's the cash rate? It's essentially the rate of interest that the RBA sets that all other interest rates in Australia flow from. When the RBA raises it, banks increase their mortgage rates. When the RBA cuts it, mortgage rates typically come down. We had 3 rate cuts through 2025. A lot of people thought the worst was behind us, but inflation started rising again, sitting at 3.8%, which is well above the RBA's target of 2 to 3%. And with global tensions pushing fuel prices and energy prices higher, the RBA decided to act. We've now had 3 rate rises in 2026 alone, and the cash rate is back to where it was at its peak. What does this mean for mortgage holders? If you have a variable mortgage, your repayments have gone up again. Every 0.25% increase on a $600,000 mortgage adds roughly $90 to $100 per month to your repayments. 3 rate rises this year means your monthly repayments could be between $270 to $300 higher than they were at the beginning of the year. That's on top of the increases that we had from 2022 through to 2024. The numbers add up fast, and Roy Morgan Research estimates that around 1.4 million Australian mortgage holders are now at risk of mortgage stress, meaning housing costs are taking up a significant portion of their take-home pay. If you're on a fixed rate that's coming up for renewal, be prepared. You are likely rolling off a much lower fixed rate onto a variable rate that's substantially higher. What does this mean for renters? Higher rates squeeze landlords. Mortgage costs do go up, and some of that gets passed through to rent. Not always and not immediately, but it's a pressure that flows through the rental market over time. If you're a renter trying to save for a deposit at the same time, rising rents slow down your savings rate. It's a compounding problem, and it's genuinely tough. What does this mean for savers? This is actually the good news side of higher rates. High interest rates savings accounts are now paying meaningful returns, some accounts sitting at 5% or above. If you're saving, whether it's for a house deposit, an emergency fund, or general wealth building, make sure that your money is in a high interest savings account, not just sitting in a transactional account earning nothing. This is one of the few situations where rising rates actively benefit you if you're not carrying any debt. What happens next? Honestly, nobody knows for certain. The major banks are split on whether we will see another rate rise this year. The RBA has said that the path forward depends on inflation data and what happens globally with energy prices. The most realistic scenario is that rates hold where they are for a while before any cuts come. But if inflation stays sticky, another rate rise is on the table. So what should you do? If you have a mortgage, review your budget, know your current repayment, and what another rate rise would mean. Always have a buffer. If you're saving, make sure that you're earning a competitive rate on your savings. This is not the time to have your money sitting in a low interest account. If you're thinking about buying, factor in the current rate environment. Borrow what you can comfortably service at these rates, not what the bank says that you can borrow at the maximum. And if you're an investor, rates affect property returns directly. The higher cost of debt changes the maths on investment property significantly, especially combined with the negative gearing changes I covered in my last video. The key thing is to understand that rate decisions don't happen in isolation. They flow through everything: your mortgage, your rent, your savings, your investments. Staying informed is the first step to making good decisions. As always, nothing in this video is financial advice. This is general education only. Please speak to a qualified financial advisor about your specific situation. If you found this video useful or helpful, please subscribe, because I'm going to be breaking down all the major financial changes that are affecting Australians every single week. I'll see you in the next video.